Best Trading presents A 2-Day Trade. Here is your host, Jeff Glass. Well, hi there. Yes, he's here, but he is getting ready to trade. Oh, he didn't tell me you were coming. Come on in. He is over at his trading desk. I am sure he would love for you to join him.
Hey everybody, today I'm going to show you this trade that I made over a 2-day period. I entered it on one day and exited on the next day. But what we're going to pay close attention to is the indicators that I saw that led me to believe that this stock was going to rise either the next day or the next day after that. And that's why I held on to it instead of selling it at a loss. So let's go through this, and this will really help you out. It's not the greatest way to do day trading, but sometimes you held on to a stock, and there are reasons for that. Let's take a look at them. So way back here, it's not on the chart, this stock was higher, a lot higher, and it was coming down. And so here it is today, coming down, and you can see that these candles are below my averages. So it comes all the way down here, and here's where I bought it, $1.81, 200 shares. Here's my indicator on thinkorswim, 200 shares for $1.81. I drew a green line right here at the price, so we can keep that in mind as we look at the rest of the chart. So I was thinking, well, it might go up right there, but then it didn't. And so I thought, well, it might go up at noon. Stocks usually do that, or 1:30 or 2:30. Or better yet, even 3:30, because it's very common for stocks to take a jump up right before the close of the day for the regular session. But it didn't. So in after hours, I had some hope right here. It rose up 20 cents. And so I thought, oh, that's a good sign that it's going to be heading upward. And this is slightly upward, if you can tell that. It's very slightly going upward. But at closing of the extended hours, which is 8 p.m., this candle right here shoots up, price goes way up. This is like a 50-cent move. So that's pretty good. Well, I could have sold it right then, but I'm not watching my chart right then. I've already left for the day because, I get tired of watching the chart all day long. It's very straining on my eyes. So I was already gone and not watching it because I already had seen that it's probably going to go up. So why didn't I sell it for a loss right here or even back here during the day? Because this stock was way up the day before this day, and it came down. And so I can see it's going down, right? Slowly going down. So I'm thinking, well, now it's down for 2 days. So I believe that it's going to go back up again since it's been going down for 2 days. Now, that's just my thinking, my psychology. Maybe it's not the best thinking, but so the next day I'm online, so I'm looking at the pre-market here, and it goes down, down, down. So now it's down to $1.40. Well, stop and think about that. That's 40 cents below where I bought it. So the price has to go up 40 cents just for me to break even at this point. So maybe I'm getting worried at that point. But you see, it did go up from this very low point. It went up here, and then look right here. This candle shot up just before well, that's 4 o'clock. Okay, that's normal. That's the 4 o'clock rise because the stock market does open at 4 o'clock, and some brokers let you trade at 4. So there's a volume increase right there. So, but it drops back down and just keeps going. But here, as you can see, it starts to rise. This is at 6 o'clock. Starts to rise in pre-market, and it goes above my moving averages here, just like it went above the moving averages back here. Now here we are here and doing it again. And if you look at it, see, this all looks level right here. So it hasn't been dropping any more than this. So starting at 4 o'clock for this pre-market time frame, it's just holding steady at this price. It's went a little higher, but it's not going lower. Great sign. That's a great sign. So here it starts to go up again. And so this is, 8 o'clock in the morning? So the volume has increased because a lot of traders come on at 7. So there it goes up, then down just before the market opens. But then just a few minutes before, it shoots up again because people are going to try to take profit before the market opens, because they know, as I have seen, that a lot of stocks go down at opening. And why is that? Because people know that traders have stop losses. And so just after opening, they want to run the price down and buy those stop losses, buy those stocks. And then when it goes back up again, they will make a profit, whereas you sold for a loss. So I decided not to wait until opening. So I bought it. Well, actually, you can see the little arrow here. I bought it just after opening because I saw these two wicks sticking up here. And if there's 2 or 3 wicks, then generally it means the price isn't holding. And so I want to go ahead and sell and get out because it's not holding, it's going to drop. So there's the proof that I sold it right here. So this is a total of a 70-cent move from $1.81 to $2.50 over a 2-day period. I only bought 200 shares, so I made $1.40. So that's great. So I'm just trying to show low account traders or new traders that with a little bit of money, you can make $100 or so with the right trades. Of course, if you have a lot more money, buy 1,000 shares, make a bunch more. But for someone who just has $1,000 or so, this is a great trade. And so that's what I'm demonstrating here. So this is why I believed, rightly so, that it was going to go up in a day or 2 or 3, who knows? But I saw the signs. It was going down, down, down. I figured that's about ready to turn around and go up. So that's why I held on to it and didn't sell it. So if you're a day trader, meaning you buy and sell it the same day, sometimes you're going to end up wanting to hold a stock because there's indicators that it will go up. You need to recognize those indicators and act on them accordingly. And that's how you make a little bit of profit over 2 days.